Good morning, good morning, good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, it is your host with the most, JD the Grade. And if you don't know who I am, go ahead and hit the like, subscribe, and the bell button. That way you can know when I'm online. I also have my one-on-one down below. You can go ahead and sign up. It is totally introductory free for each and every one of y'all. So go ahead and get yourself a date. All right. So let's go ahead and get into it. What a market yesterday. It kind of beat me up. And the funny thing about trading, you're gonna get these moments that it just kind of really just a jerk. We did have 128 points that was available to kind of move around, but it was not your smoothest 128 points, not at all, not even a little bit. So it was not for the weak of heart. Look at this. This was at 11:30. You're talking about, if you know, you know. You're talking about a 9,700 exactly too. Oh my God, that's amazing. 100-point drop sweeping liquidity just for it to go ahead and flip on its head the next candle on the 15-minute, push up about 80 points, push back down, sweeping some more for about 22 points, just to go ahead and shoot out. Probably the end of the day was the end of the day about there, just to go ahead and get to 149 points. So if you was not nimble, which today I am coming in and I am being as lucid and flow as water person as possible, you probably got beat up in the middle of it, or you got yourself a decent profit and you closed it down for the rest of the day. And the last is probably you're gonna have very small profits, and you're like, I can't understand what I'm watching or looking at. And all of those situations is perfectly fine. So just keep that in mind. I understand and I feel you. So where do we go from here? Well, we got CPI data that's coming out. Let me go ahead. And I bloopered yesterday. Yeah, I know. I know some of y'all was probably like, girl, JD, you remember that time when you thought tomorrow was Thursday, which is today? And I say to you, I apologize in advance. But let's go ahead and get it. My favorite is my FX book. It's one of the best ones there. If you use Forex Factory, still fine. If you use Financial Juice, still fine. I don't want to take anything away from your process. But I like this one because this is what I started with. So in 27 minutes in the middle of this show, I'll be going over this here. And we'll probably find ourselves a trade there. It just depends on how I see it. Get these sinuses under control. And I would say don't do anything crazy, because if you never played CPI, this is probably one of the most volatile sides of the market in itself. Actually, you know what? Let's do something fun as we wait for this. So the previous release was on what date? Where are you? Sure. May 13th. So we got May 13th, April 10th. I just want to point this out to y'all. So May 13th and April 10th. So let's go ahead and check these out. Because this is on. Let's turn this off. Oh, wrong button. That's why. All right. April. Oh, May 13th, April 10th. This is May. All right, so here's May 13th. May 13th, this is what it did. Wait a minute. Where are you? Where are you? May 13th. Where are you? Oh, I'm on the daily. Gotcha. It's in here. Okay. There you are. May 13th. Nice sizable move. Let me get rid of all of this. So that way I can kind of see it. Look at that. We're coming off of here. And then when CPI data comes in, it came in like a fire. And the market kind of was trying to find its way. And you could kind of see how it's moving, right? It's trying to figure itself out. Had a nice little spike at 3 a.m. I guess that's London session playing catch up. And then you can see the rest of the move throughout the day. So right here, 3 a.m. Right here, 9:30. Into May 13th. Oh, why am I May 12th? I guess they were preparing for it there. Let's go ahead and speed this up. I guess I erased a little too far back. So that was a nice little pop on May 13th in itself. All right, so we got that. So the premise behind that is that this can be 119 points of just movement in 15 minutes. So based on the parameters that's there, a lot can happen. Ooh, jeez. What just happened to the market? Hold on. You know, this is a live show, so I gotta do like 10 things. What just happened here? A lot of profit taking that happened right at this peak. We had to give y'all a little synopsis of all this. This all happened in 1 minute. 105 points of a range. They swept liquidity. Oh my God, that is very disrespectful. They swept liquidity, pushed it up, just to drop it and trap, all inside of 60 seconds. Just to tell you, do not. We didn't even get to 8:30 yet. Do not play around with CPI. I tell you this right now. Do not play with CPI. If you don't know what you're doing, this can cost you dearly. Wow. So just like I showed you 2 seconds ago, May 13th, we went down in 15 minutes, 114 points in a range. 8 a.m., we're already doing 100 points now. I think this is going to be one of the most volatile CPIs out of all because we're going into the summer. We're running into the quad witching. Unlike last month, there was no quad witching. So this is going to be a very tricky one to play if you are used to playing CPI. Just be aware. All right. I'm about to beat a dead horse with that. We just spent a good 7 minutes. What it do, Rod? Welcome to the party. Yeah, I think they just came to fill this gap again and see where they can get. Oh, but for the day, we are up here. We're making high, and that's the thing I'm curious about. We haven't made a lower low on the daily since here in June 6th, with that Friday. We've kind of been buoyed up based on the price action on Friday. Are the buyers are still in? Are they still holding their position? Are they looking to get up into this upper register and try to get to the new highs? New highs would erase all of the December sell-off, which is about right here. And we're really, really, really close. So that's what I'm keeping my eye on. All right, let's go ahead and push forward. We got oil, and you already know oil inventory is coming out today. I did explain that this was going to be a bit of an order block. Nice, solid rejection. We are breaking out of what looks like a bumper run. If you don't know what a bumper run is, please look at some of my older videos. But you can kind of see we're kind of blah, 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 and we're going right through it. Actually, I might do a whole entire video tutorial on bumper runs. Yeah, you know what? Maybe I'll do that. Right? So you could see this nice little action here. I think the oil inventory is trying to break above here, and they're trapping, and then we got this nice little gap and kick right here. So just keep an eye for oil to get as high as $70. I won't be surprised if we finish this week above 67. All right, this is gold. Gold has been a little sideways, which I think it needs it. We have been running hot for a very, very long time. I don't think we even tested this deviation in a while. Let's see. Yeah, the last time we tested the deviation was around here, and we repivoted it over here. That was this one here. and then now we came to test it in May 15th. That was the last time. So unless we create a new deviation here, what we break out, that means we would have to break this pivot. Actually, we probably have to break multiple pivots. This one and this pivot here. Gold could come back and test into the 200-day moving average. Very possible. I would say that's probably the most healthiest of trend in itself. That would be great because then we could buy it off the 200 and probably get some real good liquidity going back up. Just keep that in mind. Silver looks like this. So how come gold is not dragging up with it? I think they're pouring their money inside of silver before they really make gold drop. But normally this one's kind of attached to gold, and you can see one, two, give you a perspective. Let me do it like this. We went up about 8%, a little less than that, almost 7% on silver. But when we go over to gold, and we're talking about the past 1, 2, 3, 4, 5 days, if we go over to gold, it has 1, 2, 3, 4, 5. It has dropped about 3%. So that's why I tell y'all to always chart out silver, because it kind of gives you a little bit of an idea of what the market's trying to do with the commodities market and what's best to go with. If you're going to go with NQ and ES for the market, you might as well go with silver and gold. Those are the two popular ones in the commodity side. All right, British pound, you can kind of see nice little curl over here on the British pound. So we're not getting support of a devaluated dollar as far as this push up and getting new highs. So there's a bit of a divergence there. And then it looks like it's trying to find some support. Could the support that it has then drag the market? Maybe they're just diverging right now just so that way it can reset while it's going to push NQ that refuses to follow suit with it. Maybe. All right, let's go over to ES. We already talked about uptrends, how these works, and you want to get in. You can kind of see we got ourselves a solid uptrend here. ES is trying to fill its fair value gap, which starts at here, 6067. My phone was ringing. Let me put this on vibrate. Silent. 606750. That's the fair value gap start. You could go ahead and try to play to fill that one. I would say because how tiny these candles look and how exhausted this MACD look, we might get a first rejection here, then find some support somewhere else. So just keep that one in mind. And then we got the Russell. The Russell, it looks like they're pouring into the Russell. We have been on a solid trend. We have about, from the time we talk about this breakout here, you're talking about a 3% increase over on the Russell. This could really have put some good money in your wallets if you like the Russell. I don't play it as much, but I like to chart it to kind of see where they're pouring money in, and it looks like small caps is getting some love. So check out the small caps. And here's the dollar. Again, I do anticipate the dollar going and hitting some lower registers over here, but they are consolidating sideways, and I know it's because of CPI, because again, there's no data to really know which position will be great for you. And if you're sitting on cash, guess what? It's not going to make the dollar move any type of way. And if you're in a certain position that has a lot of leverage on it, then guess what? You're probably going to be locked in because you got so much profit and you're willing to risk. Either way, there is no real volume coming into the market going into here. Hence the reason why we get some very, very large volatility and violent moves as the brokers are trying to fill these orders. So as that said, just 8:30 is where everything's going to pop off. I know it's kind of sucks. You know, it would be great to be in position, you know, a couple weeks ago, a couple days ago, or even yesterday before the CPI data, and you could get more bang for your buck. But just like anything else, high risk, high reward. Play with CPI if you want. All right, so let's go ahead and run into some tickers. We already broke down the commodities. Actually, you know what? I think I'm going to just do this segment here, and then I'll just chop it out later, right? That's probably the best way to do it. All right, bump and run. If you know what bump and run is, congratulations, you're ahead. I'm just going to spend like about 5 minutes kind of explain this for those that don't even know. The way the market actually moves is multiple ways, right? And I've explained this in some instances. You got your just straight going up like this. Yeah, that's possible. But again, there has to be some type of retracement or some type of rebalance, because I'm not going to come help you, and if I'm not in a position to this upside while you're making the money because you're here. I'm like, I need some type of discount where other people think that's a good value, right? So that's when you get these pullbacks like this, right? So in these pullbacks and in these trends, you have things that happen like this. There's a trend inside of a trend. And let's just say the bigger trend is a 1 week, and then this is a 1 day, and then now it's going down, kind of like this, and then it finds some support, and then it starts its cycle all over again, right? That's what happens inside of the market for the most part. But how do you know when it's going to give you those retracements? What about the false signals and everything else? My favorite way of knowing when there's going to be a sense of a reversal is when there is a bumpy run. So let me go ahead and explain it from a weekly standpoint. If I squeeze this chart all the way over, we could see, all right, there was a downtrend, but generally we're on an uptrend over here, right? So if that's the case, then that means this little area right here is building a little bit of a base, but bases are not as flat as you think, right? I've seen some videos where people are explaining, well, you're going to go ahead and do this and just put yourself a block right here. This is your order block, right? And order blocks are cool, but I like to think in the summation of everybody else. I love EMAs, but it's not my primary. I love trend lines. It's not my primary. I love MACDs and stochastics and everything else, but that's not my primary either. I love pure price action. I love seeing what the candles are doing, and if they were going to do something, then they would do it, and if there wasn't, then they won't. And that's just how I look at things, right? So if we look at here, you could kind of see that when we made this high after this point, so let's just say that this is our point, that when we made this higher high, that means right here was our higher low to create that higher high. Hence the reason when I always have the conversation with y'all in my videos is you always need a higher high before you can make a higher low. That's your pivot and you can find it, right? So if we look at this, that this higher high is there, so that means when we came down to here and we broke away from this point right here, guess what that means? That means this was our higher low that created that higher high, and we're going to continue. Well, wait, we never touched this trend line. So what happens when we make a higher high after we never touch the trend line? Maybe it's an EMA, maybe it's an order block, maybe it's somebody just opening their mouths and talking about tariffs. I don't know. I don't care. I'm just going to look at what the market is going to do. And the market is saying that we're going to make higher highs here. If I was a bear here, I'm scared there. I lost a small amount of profit because it can get a lot worse, aka, right? So if we're looking right here, then that means we are making a deviate. We are moving away from the trend line. That's a deviation. This is a deviated trend line. So now this point to here is a higher high, and this one is still in effect, except they're super happy because they got in on this trajectory versus that trajectory. But this is when the market, and to kind of break it down, you got smart money over here that adjusts accordingly, and then you got dumb money like, yo, you know what I'm saying? Hey, have you seen NQ? Go check it out because it's starting to move, and they find a price that they feel comfortable with, and they jump in, and then they start to really put pressure in the market. While these people are like, yeah, we got some supporters, right? But then let's go ahead and continue. So we're still making higher highs, and you're like, well, JD, we just made a higher high right here, which you just said, and we started to pull back or consolidate right inside of this area. How come it's still making higher highs and never touch the trend line? Just because you put a trend line does not mean it's supposed to touch it. I like to look at trend lines almost like in a way, kind of like this. A little elastic. Almost like that. That if it ever came back, it's going to come back like a zone, and boom, multiple deviations. If you use linear regression, you can understand the process of what I just did there. But anyways, let's keep this going. Let's keep this going. So here, right here, you got another consolidation breakdown. They didn't come down here, so that means when we made a higher high here from this point, that means we're deviating from the trend again. It doesn't mean that the trend is going to completely and utterly fall apart, but it is telling us that there is these sense of pullbacks. Look at that. Nice little move. readjust here, and then we started making higher highs. Oh, wait, we breaking down, we're consolidating. This is when you can see a trend is starting to give up. And then these are weekly candles, just to kind of give you a sense of this. So this is October 2022. Found our base after the 2021 sell-off that destroyed everybody's portfolio, when they thought, hey, we just gonna pour money into the market and it's only got one way to go up because I got all this PPP EIDL money, even though I don't have a business. And it's a lot of these cartoon characters. Anyways, that money got liquidated and they pretty much snatched their souls during 2021. But 2022, there's a point where you just cannot sell any further. We had a nice little solid base. We started to deviate. We started to deviate again. We broke out. You could call this a W for my W players. You could call it reversal. You could call this head and shoulders. There's a shoulder here and there. I don't care. I'm just looking at the trend. I'm looking at the price action. But look what it did. This is what is considered a bumper run, right? We keep on bumping higher. Here's one move, and we bump the deviation. We bump the second deviation. But that second deviation wasn't strong enough, and guess what they did? Those that were sitting on the sidelines like, damn, I wish I caught that trend. They probably drew their lines just like this. They bought around here. Those that love the 50 EMA, well, if it stays above the 50 EMA, I'm going to wait until it gets to the 50 EMA until I get there. This is that one right here. It started a micro trend there. For those that are actually trying to get into the zone, they probably like, well, if I go over to the monthly, this monthly, oops, come on, get back to where you were. This monthly, it looks like an order block, right? So you get all these theses getting slammed into one right on that instance in itself. This is where you play the bumper run. Nice solid move to the downside. You're playing that reversal until they fill it down. You notice that it can't make any lower lows because you probably was targeting this major trend down here. And guess what? This is out the window. It's destroyed. But this one right here, you have to readjust because this is the new pivot. Look what happens with that new pivot. It got tested with the August 5th low. But JD, you said you was going to explain bump and run. That is bump and run. You're going to bump over up against the price. That price is going to go ahead and push on up. And when it gets there, it's going to retest the trend lines. It has no choice but to. And when we made this drop in April, we was trying to test this trend line down here. We make this higher high, potentially. Anyways, let me not talk y'all ear off. We got like 9 minutes until CPI data comes out. Let's run through some tickers until we get there. I was looking at a few things. Let me go get my sheet. Why are you there? Go back up here. All right. Let's talk about UNH. Now, UNH, I'm really curious on what they're going to do here. I'm excited for this. Monday is their dividends. If you don't know about dividends, dividends tends to be a point of sell-off. Here's a dividend right here. We turn a red candle. Here's a dividend, 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 red candle. Dividend, ooh, doji. Dividend, kind of green. Dividend, red candle. I hope y'all see the pattern. So what usually happens, again, there's no real science to it. You have to do the work. You have to chart properly. But whenever you see dividends coming up, just understand those that were in are going to shave some of their profits and lock in. We're not, when it's from an investor standpoint, we're not the type of people that's just like, I'm going to park my money here unless I'm accumulating for a longer move. Like I see something in the horizon that's going to be better. But I'm accumulating, and when I get my dividends, I'm going to start shaving, especially if my shares are in profits. And that's what you're going to get here, especially hedge fund managers have to report. You got pension managers, all these people, they got to lock in some profits because when people start to cash in their pension, they better have the money there. So they're not just going to park the money and just leave it there and be like, I hope it just gives me higher. No, they have a plan. And normally around dividends or the run up to dividends, there's usually some type of sell-off, repositioning, and then they probably buy it right back up after dividends. Just keep that in mind. So you can kind of see that here. So I'm curious when this one is going to be a red candle for the week. Again, this is weekly chart, right? When it's a red candle for the week, does it find support? If it does, then that means that's probably a good spot to get in. If it does not and it starts to fall all the way through, then you might get one of these actions. You're seeing this dividend. They already started to sell off, and then they sold off even harder there, and then it continued to another week until it got to the 200 moving average. Just keep that in mind. So I would say if you're going to play UNH, this wick right here, of course, this is because of the scandal. What I like about this is that we have this space, price opened here, price closed there. So this is a gap. You know, I've had arguments with people before. They're like, this is not a gap. It is a gap. So this could be the target that everybody's going to try to aim for. But again, they got a lot of bad news that they got to go ahead and clean up. Plus, their earnings was solid, but I think they guided lower because of the scandal. Let me make sure I remember this properly. Yeah, they guided the EPS lower. They think the revenues are going to still be there with the scandal. I don't think it's going to. So I'm not worried about playing it too far up, but I want to go ahead and ride the momentum of everybody else. Again, we're traders. Our job is to give it to some other sucker. Well, that's what it is. That's what it is. And there's going to be times we're going to be completely and utterly wrong, and that thing just continues to that direction. You're like, damn, I could have made more money while the other person's make the money that you just had the position, or you got right off of it right on time. Like, haha, here you go, hot potato. All right. So just keep that in mind. We are traders, and that is our goal. If you're investing into UNH, I think it's not a bad price being here as an investor, as long as it doesn't get back down under 250. Let's just say you got in at 277. I think 245 is a good risk from there. So about $40 or so on that side. But this 300, I need you to just go ahead and tell me what you're going to really do. A nice little pullback here before you pounce if I'm investing. But right now, I want to see this thing get above 334. Just period. It's just, I feel bad for UNH in a way. Let's go ahead and keep this party going. Tesla, I screwed up on this. I marked off some very interesting levels here. Let me see what I wrote on Sunday, and I feel like kicking myself in the butt. Oh my God, this is my target too. I was looking for the 335 area with a 284 stop loss. This thing did get towards stop loss this week. We got to 282, but again, it didn't do that one second. It did it first. So the recapture was what I could have got into, and yeah, I was looking for a break above 305, and it was which makes sense with a psychological level. So if you did play Tesla, congratulations. What you saw was sound, and I've explained that to y'all. You know, levels like 600, 650s, even 575s, things that's in fives and zeros. 25s does work too, but I think the fives and zeros has more strength than anything else. It tells you a lot. Like, for example, if I do this and put 350 here, you're going to see resistance. You use that support, and so on, and so on, and so on. That's how the game kind of works. It's just the mind. I'm going to play from 300. I'm going to play to 350. That's the way. Oh, it's pushing strong. Oh, let's go ahead and squeeze over to there. Let's check out gold real quick. Okay. I think it's because in preparation of CPI. I think they seen something, people that, gets the reports early. I mean, not people don't get the reports early because that'll be insider trading. No, they don't do that. I think they already started to position themselves. I would say the fingerprint that I'm looking at, or the thing that I'm seeing that will probably catch my attention on this 15-minute chart. Yeah, we already broke the downward trend. So I would say this is what they're looking at. Kind of like that. And when we made this higher high here, we broke our deviation, but we didn't break the main trend. So it's something like that, right? Nice little solid move until we get rid of this structure, right? Highlighted here by getting, I did mark off this 330. I think there was a purpose of me putting this 33791. That's what you want to probably look for on there. We got a little bit of a 15-minute order block that we're running into right now. Yeah, about right here. If this thing can fly through here with the CPI data, which is in 45 seconds. Ooh, let's go ahead and get ourselves ready. This MACD and everything should be sound. Do I feel like being risky right now? I'll do it in my leap. Let's do it in my leap. What are you? Any monitor chart? There you are. All right, 20 seconds. Let's see the chaos. Let's go over to NQ because NQ sometimes the moves are a little bit more violent and it just stands out more. 12 seconds. This could probably take ES to 6100. All right, here we go. Boom. Boom. How much more damage y'all gonna do? Because and the thing with them pushing it here is I was looking at 22,091 on NQ, and now that we've penetrated that area, I think sky's the limit. I think there is going to be a need of a retracement in some way, but for the most part, we're gonna be getting new highs sometime soon. That's what it looks like to me, unless the market can really hold down and keep it under this 22,100, and they're using it as a liquidation sweep. This thing's gonna do something nuts. Let's go ahead and take a peek of what I mean by that. Let's check out gold too. There we go. They got that because of that move. Trump says deal with China is done. Oh yeah. If he open again, that like I said, the charts is one thing. People's mouths is another thing, and people's reaction is the last. So the chart is always going to show you something that you gotta be like, wait, why are they doing it like that? Why would it be here? Why would it be at that level? They're like, if I was a bear, I wouldn't let it get this high. You know, these are the processes that you have to think in your head, right? And then when they open their mouths, it should be a little bit of that confirmation. That's why you always hear buy the rumors because it should be in the nice and quiet areas. Sell the news when they open their mouths because there's going to be a whole lot of these reactionary folks coming into the market. It could be reaction because they're out of position. It could be reaction because they're in an adverse position. It could be a reaction where they're like, wait a minute, let me jump into it. I call those the FOMO gomos, right? And that's when you get completely wrapped up. Oh, yeah. Oh, my God, Ron. Listen. That would be freaking crazy. The big beautiful bill, it's amazing, and we went ahead and solved the tariffs issues as well. We got everything done. Boom, rockets off. Then out of nowhere, because you know Asian session is after the New York session, so Trump talks about it then, and then Asia's like, we ain't accepting this crap, because I'm telling you, China's been bold on the British networks talking cash crap, really coming after America. So that will be a wild situation. And the funny thing about it, the people over in China know how to trade. They'll position themselves and open their mouths just as bad as Trump. I digress. So you remember, at the end of the day, past results does not indicate for future success. Just remember that little disclaimer that a lot of these brokers put. So the gold looks beautiful. Are you in it, Rod? It's getting through that level. And then now we can move, just like I said, our deviations. This is the deviation here. So ask yourself, when we broke through here, when you shorted, then you realize that it couldn't get past this level. And then when it got to this point again and notice that it can't get above here, when you shorted again, when you shorted again, these are the moves. That's your bump. And that was the rundown. And now they're about to use support and liquidate everybody that accumulated their position to probably play this to the downside. Let's see the other tickers. Let's go with silver. Let's see what silver did. Not too much. But again, this is why I was explaining. Like, they'll probably place. Look, here's it. This thing was down 3, roughly, and then silver was up 8 or 7, right? So look at what they're doing. They push silver down. That means they probably took their cash off of silver, realized gold is the place to be. They jump right back into gold, and they're the ones that's pushing it back up. I'm telling you, you just keep an eye on silver and gold. It's not only a song. And then you got British pound. Look at what they're doing. Now it's pushing up. And because gold is pushing up, that means dollar's pushing down. Because people are getting out of the dollar and putting it into the commodity. They're using their dollars to buy gold. Come on, think about it, right? So all this is putting everything into relative place. Again, New York session might do an adverse reaction to this. So it doesn't mean that this is just going to continue like that. But it looks really, really good. You know what? I did say I was going to do my leap play, and I was so worried about setting my chart, I didn't even realize that. Happens. That was a pop-up in large magnitude. That was 102 pop-up in 5 minutes. 102 points. 400 ticks. That's 400. 4 times 5. So that's about a $2,000 per contract move. $2,000. Solid. All right, let's run through some more tickers before I get up out of here. I'll probably wrap it at 8:45-ish. Still got some more UNH. Actually, on a longer term, like I said, I could see UNH on both the upside and the downside. Oh, I got something very controversial for y'all. For all my Costco lovers. Costco, I think it's going down. I really think it's going down. I think I missed the train on where I wanted it to be to go down. Let me see what I wrote on Sunday. I wrote looking for 10-11 to fail. 10-11 did fail. If it brings a strong close, we're going to go then. I'm targeting 985. So probably should have bought some puts yesterday. Probably should have. I think the real true support is down here somewhere. And if they actually came back into here, there's a little bit of wick here before we actually start to really pivot ourselves down here. See how we kind of use this area as a support? I'm looking to see, can they get to 942? Because that will then get us to the 200-day moving average. And I think that's the true discount on Costco. And if they do, I think they'll go all the way back up here, because over here is the little bit of that rejection of that gap. And they were trying to get back to it. And it was like, we ain't letting y'all get here. So I don't think it's going to be an M pattern, because action like this usually leads to M patterns. I think Costco's too good for that. But I think there's some more discounting coming down. Let's go to the weekly. Yeah, I think there's some more discounting that's going to come down. And whatever move, maybe like a pivot off the 50%, kind of similar to what happened here, where they kind of like consolidated, brought it down, and then took off to make the new highs. That probably will be what you want to see. Yeah, that was a little choppy though. Kind of choppy here too. Yeah, maybe we get one of these bing, bing, bing. That's probably what we would need on that. So maybe even lower. Halfway point of this candle. Put a fib. Where's my templates? Yeah, kind of like that. And maybe come down to 932 max. But I think the 940s is not too bad for that. All right. What else I got for y'all? Meta went crazy. Apple WWDC. I wonder what's going on over there. Let's go check this out. How you doing over there, Apple? It's still floundering. It's gasping for air like a fish out of water. But actually, this is another perfect bumper run, like I was saying before. Nice downward trajectory. They're looking for this target before they short it again. They're struggling to get there, sitting on top of an order block. Had a micro trend that was breaking out. That micro trend is consolidated until it broke down. It's worthless, just building, building, and building. But if we can't get through here and we consolidate till August, yeah, this thing might just go ahead and drop down even further. So I do have puts. Failing to get above 213 4 times. They've tried numerous times. Let's see. If it closes below 200 with strength, somewhere in here, this can't help but to get to our target at 170. Somewhere around these lows. Because technically, in a little bit, we're about to destroy this line. That was our downward trajectory that started back in February. And instead of rallying like the rest of tech, Apple's just been going sideways. And it's because they haven't launched anything really. And it's a weird spot. All right, let me go over checking NINQ real quick and see how we're still doing over there with the 15-minute. Looking like it's still holding strong. I wish they would have left this alone and came back down. Let New York session go capture that. That would be momentum to go up. So this can lead to some choppy. Tomorrow's jobs reports, so there might be some profit taking in that regard too. So just keep that in mind. But this looks good. It looks good. All right, let's see. Let's run through some tickers. Actually, you know what? It's the let's talk third month. Let's just stick with third month. A lot of the earnings has went by, like, you know, your Costco's of the world earnings that was done in May. CrowdStrike earnings was here. This was June 3rd. Alta had a solid earnings. This was May 29th. Adobe. Oh, Adobe is coming up. Let's see. Let's see what we can find. Maybe we'll find a trade on Adobe. Okay, so Adobe. Actually, let's start all these lines off. I don't want to confuse y'all. Got a solid order block that's right here. Not order block, fair value gap. And that could be what they're targeting. Again, if all things are equal, this is 1 point, another point, and we're breaking down this downtrend. We're going to go over to the daily to kind of really break this down. I do think we are rejecting because of this price action over here. So let's do something fun. That's tomorrow, huh? Let's do something fun and crazy. Let's call it $500 calls on Adobe tomorrow. Yeah, $500 calls on Adobe. Let's go over to the daily real quick. And what I'm looking for, you can already see they already plotted it out for me. Boom. And this is what's there, but we don't move the line yet. There's our higher high right here. So we need to destroy this level here. So let's call this a strong close above 423. Take some $500 calls. I know. You're probably looking at me like, what, the 200 moving average is right there, and there's a major one that's sitting right here. But I think they're coming for this weekly fair value gap. Oh. Again, I'm not a gambling man. I'm not saying that you should do this, but I'm going to be looking at an earnings play for Adobe for $500. I'm going to probably buy some time on it just so I can be able to protect myself in case I am wrong. But Adobe, based on these parameters, it might get to 541. Want to know what else I see? We're coming off a bullish divergence, and people probably thinking that that's all they have. We built another deviation of this trend line here. Can this break down and come down to like 320? Can it come down to like, sorry, not 320, 370? Maybe even a pivot down here at 320? That's if they break this trend line. But they got to go through a whole lot of tree branches before they fall all the way through. Things like earnings can be catalysts for that. Let me see what is their guidance. So the 4.4508, 57, 5849, 49. Basically consistency, in line, everything. Oh man. Oh man. And if they have strong guidance on the report too, woof. Adobe to 500. That's I'm just gonna say it. I'm just gonna say it. And if I'm wrong, listen again. If you have $1,000, don't risk more than $10 on the contract. If you have $10,000, don't risk more than $100, and so on. 1%, max 2% on your portfolio if you want to take this shot. But I think Adobe for earnings is going to do something really ridiculous. Everything is setting up for it. Or they're going to take a lot of people's money that's been gone since April. Accenture's over there. FedEx has earnings, but to be honest, the space has been getting its butt whipped, especially with the fact that Amazon doesn't need them anymore and they do their own deliveries. So, very interesting dynamic. Zscaler. Now, Zscaler, in this regard, it's one of, kind of falls into my, I missed out on CrowdStrike. And you know what? I need to make a list. CrowdStrike, Zscaler, Palo Alto. Let me give you all of them. Zscalers, Palo Alto, Palantir. Did I go through the cybers? CrowdStrike, Datadog. There's another one in the cyber. I can't think of the name. And I was just Snow. I got a whole list of these because when they move very aggressively and very violently. That's Zscaler. Here's Crowd. Here is DDog that I think is lagging, but it's going to be the next one that's going to go ahead and go off. And then PanW, the leader. Whoa. When did I draw that? Okay. We're in an inverse head and shoulder breakout on PanW. And if this actually follows through, we're talking about PanW might be the catalyst that drags the whole entire market right back up. We do have a bearish divergence that's happening here. And this is an inverse head and shoulder in the wrong spot. I'm just telling you this right now. You're supposed to get inverse head and shoulder in the bottom of a downtrend. We have been on an uptrend for a while, especially with 2024. So this could be the bottom of a micro downtrend after making new highs, especially after their split. Could that, oh man. I wonder if there's a PanW leverage. Maybe I'll play it that way. Yeah, this looks good, folks. Another one, PanW. I need to write a plan around. You know what? Let me just write this stuff down. Now, let me add to my list. All right. ADBE. And what was the other one? The other one was PanW. I'm looking right at it. PanW. do a whole entire mock-up on that. All right, so let's go over and check out NQ because I got one of my alerts that popped in, and there's probably some liquidation that's happening, or they're continuing the party. I would say it's probably the liquidation part. Yep. Which again, that's I wanted something like this to kind of sit. Get one of those, and then when New York session kind of happens, we'll go ahead and kind of wipe the board with everybody that thinks like these are short-term bears that's stepping in right now. Let's see what happens. All right, I think we went the full gamut. I think we did a good job with everything and how everything is panning out. I hope this makes a lot of sense to you. Again, the purpose of before you take the trade is to kind of give you an idea of what the market can do so that we can plan accordingly. Don't forget, the link to my one-on-ones are down below in the description. Go ahead and sign up. I have it running all the way till June 30th. And last but not least, don't forget to hit the like, subscribe, and the bell button. Share it to your friends and family. That way, if I'm bringing y'all good information, by all means, go ahead and send it to them. If I'm not, write in the comments. I'm terrible. I'll take it. I'll give you a response on why I am terrible or not. And we'll just go ahead and cross that bridge. But that said, let's go ahead and give you the best of best wishes so that way you can go ahead and conquer the market and be the best type of trader that you can be. And I will see you tomorrow again at 8 a.m. You have a great day. Bye-bye.